Clarity Act, by the way, is the Digital Asset Market Clarity Act. It is a comprehensive U.S. framework for regulating cryptocurrency. And one of my favorite people in the whole world, because I just think he's fascinating and he's a great guest, and we're going to start hearing more and more from him, is Charles Allen. He's a CEO and chairman of BTCS, which is a fintech company, financial technology company, that's enabling the evolution of securing next-gen blockchain in terms of not just making this token world something that is investable and spendable, but it's actually on-ramping it to the rest of the world. And I think it's really interesting how Ethereum is talking about this. Charles, talk about that Clarity Act, because it really is an interesting sort of finish line, which is ending years of that garbage of the regulatory ambiguity that was all around this. Wouldn't you agree? Isn't that sort of the deal there?
Yeah, I mean, it's a great point, right? We have the Genius Act, which allows for stable coins, and we're getting very close. It should be going to the Senate floor soon. But to allow institutions to be able to engage in digital assets and know what the rules of the road are is super important, right? It's kept real money on the sidelines. It's left innovation to the tech companies that are willing to kind of move fast and break things. The better part of a decade, the SEC was trying to put out multiple businesses with all sorts of false and misleading claims, and so to be in a position where the SEC is viewing crypto as a huge innovation, right? Blockchain technology and what it can do for our economy, and then to have the government driving forward with positive regulation is it's just night and day.
But so what's interesting is that this passed last July 2025. And then the Senate Senate Banking Committee came up with a different version, now, which completely confused me. And I think that was just a couple of months ago. Talk about that a little bit.
Yeah, I think the biggest thing at play was being able to receive interest on deposits, crypto deposits. And if it makes sense, right? Like banks don't want, the likes of Coinbase or Kraken or other crypto firms to be, in their mind, acting like a bank because they're paying interest on stable coins. I think I'd like to see the ability to do that. There's kind of some compromises there in terms of, are those tokens being used as as a utility? But it makes sense. I mean, the banks are protecting their turf. They don't want to give up market share.
Exactly.
Why would they want a new technology to push them, into obsolescence? So it makes sense that they would, lobby and push.
And that's such a great point that you make there, because if you think in terms of blockchain, people are saying, well, how do I get on it? Well, if you're using a Stripe payment system, you're already on it. And the point is that, in my opinion, because we're getting lower fees and taking out middlemen here and there, and to the point sometime where maybe there's no stockbrokers and no auto salesmen. But the long story short is, this is a real threat to the Wells Fargos and the Chase banks of the world, in my opinion. Or is it? Because on one hand it says, well, we better figure out a different profit center, a different funnel, because if we go to this section here, it makes the current banking almost obsolete. Talk about how you feel about that, because I think it's really an interesting question.
No, it really does. I mean, the fact that you don't need intermediaries anymore is something that we've never seen really in the world, right? There's always been banks. There's always been the need for an intermediary, whether that's a title company, whatever it may be. And to get to a point where you can move an asset, whether that's dollars or a crypto or whatever tokenized asset globally without a trusted third party, it basically disintermediates a whole section of the economy. And so if that's the business you're in, you kind of have to adopt or die, or you need to slow things down so that you can adopt. And that's really what we're seeing now is these larger banks have a major concern, right? That they're going to lose business to a newer technology that kind of makes them obsolete. And so I think that's the way the world's going. Everybody wants to own their own stuff. Everybody wants to be able to transact with other people, and nobody wants to pay, fees in the middle. And in the long run, when you get all the technical, garble out of the way of, crypto and blockchain, and it's just a great user experience where you can own and control your own assets, and move them freely around the world, that's going to be, a remarkable development for the world.
Hey, Charles, along those lines, you mentioned the word adopt. Where are we, like you said?
That's a great question.
Where are we in the arc of the story of adoptability and adaptability for people, on a one scale? Like, I'm still trying to have people explain what blockchain means to me.
Like Cindy, like Mary Lunchbucket.
Yeah, I'm not the person, but on the scale of these businesses, banks, companies, where are we in the arc of that story?
Well, I think it's moving along, very well. The biggest use case is obviously stable coins, and I think that's something that for the average person, it's like, I don't understand crypto, I don't understand blockchain, I understand why I need it. It makes sense, right? You have your bank, you've got PayPal, Venmo, all these sources. Well, if you don't live in the U.S., you may not have all of those, and so having access to the U.S. dollar is huge, right? If you live in Argentina or Venezuela, or like any of these countries where or Brazil, where all of a sudden you want the US dollar, but it's really hard to get. Maybe you're still using Western Union. All of a sudden you can move dollars, you can send it, you can send it back to your, your family, wherever they are, without, a big cost. And you can do it with 25 cents or $1. And so that's kind of a first use case. But I think for most people, it'll be like the internet, right? Like in the early days, everybody was talking about the technology and how it worked. And now people don't care how it works. I never hear anyone talk about like protocols like POP protocol or SMTP or HTTPS.
Right,
Nobody
right.
cares, right? Like your Uber shows up, your Instacart bought your groceries.
So Charles, what's the velocity from where we are now to sort of that? Is that a 10-year window? Is that a 5-year window? Is it a 6-month window? Or is it just dependent on outside forces?
I think it's probably 5 to 10 years. I think it's going to come very quickly, though, because the infrastructure layer is there in terms of the web. We need the regulatory layer, a roadblock to be removed and have, the guardrails so larger companies can operate. And I think what's actually a lot of the companies that will win, which is probably why they're slow rolling it, is the companies that already have a customer base. Because what blockchain technology does not do is create a new product category off the gate, right? It's not like someone came like, hey, here's an iPhone, this is what you should use.
Right.
It's kind of like, well, here's a better way of doing it. We've got to replace the old system. And so if you're an incumbent player with tons of users, it's very easy to adopt a new system versus if you want to break into a market, whether that's tokenizing concert tickets or tokenizing real estate, there's already an established market there. So it's going to be a bit harder. But I think what it'll do is on the back end, when we fix the back end, you'll see a lot of things just work better. The stock market could work.
I couldn't agree more. Real quickly, since I made you give us a top down of the whole industry and didn't talk about your company, talk about BTCS. Where are you at now, and what's coming up here in the next years that you can talk about? I realize you're a CEO of a public company, but at the same time, some exciting stuff's happening in your space.
Yeah, there's a lot of exciting stuff. I think what differentiates our company is we're building a scalable revenue business within the blockchain ecosystem. We're not just a digital asset treasury where you hold a bunch of ETH or Bitcoin or whatever and hope it goes up. And I think that's kind of what I think most people miss. And the proof's in the pudding. If you look at our Q1, we had 47% gross margin up from single digits in the prior period.
Yep.
So for us, I couldn't be more excited. All these, the positive developments on the regulatory front that are, knock on wood, coming, the, inflow of money that we expect, and, the price of various cryptos, like that'll, time will tell. There are macroeconomic factors behind that. But our goal is to build a business that's not tied to the price of crypto. It's tied to, our activity.
Fantastic. Charles, thank you so much for your generosity with your time. We'll see you in the next week or so. Good stuff, man.